Hello, mic check. Okay. Good morning, everyone, and thanks a lot for attending our panel today, and I will be your host. My name is Alice. I am the investment partner at Foresight Ventures, and also the head of North America. Today, we are very honored to invite three of our panelists to join us in the discussion of the new investment frontier. And let's give a round of applause to all of our panelists. Okay, I'll just dive into the questions. So for us, the first question I will give is would you give us a brief introduction about yourself and also share with us a few investment topics that you find most bullish on for this year? Yeah, we can start with Calvin.
Sure, yeah. Hi, my name is Kelvin Ko. I am one of the co-founders of Spartan Group, but specifically I'm responsible for our investment business, where we have three funds. We have a liquid crypto hedge fund that we've been running now for about 6 years. And we also have two venture funds. And separate to our investment business, we also have an advisory business that works with crypto companies to help them raise capital, do M&A, and do restructuring. And over the years, some of our biggest clients are, for instance, projects like Blockstack, Dapper Labs, the Solana Foundation, Bybit Exchange, and many others. Yeah, so that's just a brief introduction.
Yeah. Thanks Foresight for invitation. And this is Sochi, the founding partner of ISG Ventures. ISG Ventures is the pioneering investment firm from the 2017. Yeah, and we invest heavily in the infra space. Yeah, in the past couple of years, and we have around 100 investment, and about 50% of them are listed in Binance. Yeah, so in the past couple of years, we just follow up the Fed protocol in application investment thesis, and we still follow up in most our investment principle. Yeah, like right founders, right investment thesis. Yeah, and recently, yeah, we also pretty bullish about the risk-taking sessions and the security economy. Yeah, so like to say, yeah, we invest in EigenLayer and Babylon. Yeah, so like EtherFi, yeah, like EigenLayer, there's the side markets like stakers, operators, and protocols. Yeah, so we can see right now in the past couple of months. Yeah, the EigenLayer TVL down around 20%, but TVL is not not at all for the EigenLayer. I like to say the new coming area will be the AVS. Yeah, for AVS, they will come from more consumer side and new assets. Yeah, in the EigenLayer. Yeah, so in another session, yeah, we also pretty bullish about decentralized GPU network. Yeah, in AI inference and in the training network. Yeah, we can see the decentralized GPU network. They can provide a lower price and cost for the AI startups. Yeah.
Hi, I'm Jason. I'm the founder of Foresight Ventures. We've been around since September of 2021. A hybrid fund doing both tokens and private investments. I think most people know us by our pretty dedicated focus for APAC, especially Chinese founders. In fact, 80% of what we've done in our private investment came from Asia, especially Chinese. We also are, I think most people know us by our focus around two consumer products. So a lot of our investments has historically been around centralized exchanges, SaaS software, mobile apps, and entertainment products like games. Regarding what I'm most interested in, I guess the year is half done. We haven't seen that much crazy, exciting stuff this year so far, but I think, in the next 6 to 12 months or so, I'm pretty bullish on entertainment, Ponzi-esque things that could come out of Telegram. I think the distribution platform give rise to a lot of interesting things to be done. I think we're finally going to see some aggressive money games combined with entertainment type applications like games. And then I think lastly, we're going to see some pretty exciting sort of 2C hardware type products. I think those are the three areas we spend most of our time on these days.
Awesome, awesome. Thanks a lot for sharing these early alphas for us. And also, as partner for Foresight Venture, I also like to share a bit about Foresight. So for us, our investment thesis is definitely research-driven, and we do have three criteria for investments. One is definitely, as Forrest mentioned, we love to invest in disruptive innovation with big addressable market. And then second is that we believe that only the product with true product market fit can actually sustain in the long term. And then thirdly is definitely we're looking for teams that is like the top tier in the sector and also have the ability to build a global impact in the global community. With that being said, Foresight has been focused on a lot of investments this year on AI and crypto, starting from infra like IONET, like Sentient, and also we did quite a deployment in AI application layer like MyShell and a lot of other like interesting AI apps. And then we also did a lot of deployment on the consumer side of things, including the social media, GameFi, and also a lot of like deepen projects. These are all the things that we find pretty interesting for this year and in the coming like next cycle. Yeah. And my next question would be, so I'm wondering like what's your thoughts on, sorry, Calvin, do you like to add on that? Any comment? Okay. So the next question is, everyone knows that currently the market is actually pretty choppy and price is pretty unpredictable. So would love to know your thoughts on the long-term trend of BTC and the crypto and how this kind of long-term price fluctuation would actually affect or whether it will affect your investment decision process, or like how do you see that influence the valuation of the primary market price?
Yeah, so maybe I can talk a little bit about our investment focus because I didn't talk about that just now. Yeah, so I think on the venture side, we certainly have been very active in the gaming space. We launched our gaming fund back in 2022 at a time when gaming was very hot. And since then, a lot of players have exited the gaming space. But you know, I think that's why we're excited about it actually, because you know, when everybody is sort of trying to chase after the same deals, what we tend to find is the deal valuations tend to get very extended, like what we're seeing in the infra space at the moment. So we've actually been, you know, quite, you know, contrarian in terms of continuing to double down on gaming, because you know, I think that's one of the verticals that will bring a lot of users in Web3, and because there are so few players left in Web3 gaming, we actually have a lot of flexibility in terms of choosing the deals that we want to invest in, as well as negotiating very favorable terms, right? Of course, we've also got investments in the infrastructure projects from back, you know, 3-4 years ago, but we're doing a bit less now. We've got a few AI investments, but I think AI is also getting quite frothy in terms of what valuation is. I think DeepIn is interesting because we're starting to see quite a bit of interest, and we're starting to see some projects being able to monetize their data. And I think because DeepIn is so early and there's so little dedicated capital in the DeepIn space, we are still able to find projects very early stage where valuations still look quite attractive. On the liquid side, we have been quite focused on the Solana ecosystem, just because that's one of the few ecosystems that continue to see accelerated growth. The other ecosystem that we've been also investing heavily in is the TON ecosystem. TON's probably the fastest growing ecosystem that we've seen over the past 1 to 2 years, right? And then, some of the other ecosystems that look interesting are, for instance, Sui and Aptos, where they're starting to get some user traction. So that's where we're spending our time on the liquid side. I think in terms of our market views, obviously you hear all kinds of noise in the market these days. Some people are bullish, some people are bearish. It's very different from the 2020 cycle where everybody was unanimously bullish, right? But I think that's actually healthy because it keeps the valuation from getting too excessive. But I still think we're sort of probably midway in the cycle at the moment, right? Where we've seen the big coins like Bitcoin and Ethereum doing very well and continuing to outperform the altcoins. But I think given the persistent underperformance of altcoins for the last 2.5 years, I think we're getting to a point where the risk reward for altcoins is starting to look more attractive, right? And so our view is that barring any unforeseen events like a major war or a financial crisis, I still think that the market will go higher from here, especially now that, I think the path to the Fed starting to cut rates is starting to become more clear. And I think when that happens and more liquidity gets unlocked, we will see the crypto space do much better.
Okay, the question is more related to the FDB or investment.
The question is about the market, the macro in general. What do you think about the future trend and how that influence your decision-making process?
So in the macro side, we think about the soft landing become possible. So the recent large dip is the readjustment for market leverage and unstable holders. So I like to say over a 6 to 12 months time horizon, the setup for liquid token look very good. Like to say the central bank are shifting from tightening to easing. And regular clarity either from the cost or the election outcome. And the regularity clarity combined with mainstream applications will spark a moment similar to 2022 AI awakening. Major institutional allocators and pensions, endowments, foundations, most of the funds will look to expand their crypto allocation beyond VC and majors. So I like to say the last time global capital market meltdown like this was March 4, 2020. So we also the global economy was going to end. Predictability. The media claimed Bitcoin had failed as a hedge asset. But March 12, 2020 wasn't time to panic. It was the best buying opportunity for BTC in a decade. So nothing fundamental trends about BTC because of COVID. So I like to say right now we see the same setup today. It's a good time for the market.
Well, I think it's a good time as long as I think we've got an air pocket in the next 2 months or so. I think there are a lot of confluence of factors that are pretty bullish macro assets. I'm not very sure about 2025. I think second half we're going to see pretty heightened volatility. I think the Harris odds are probably going to top at some point in the next 2-3 weeks before DNC, during DNC. I think Trump has a bunch of dirt on Harris. I think U.S. macro is trotting this soft landing, hard landing, no landing path. But before we get to the hard landing, believe, liquidity really can drive NASDAQ up to all-time high again and again and again. And if we were to believe that crypto, especially Bitcoin and ETH, is this risk-on asset, probably does pretty well. Like I could see 90,000, 100,000 before October. I think after that, I think the picture becomes questionable. I agree with the rate cut, driving liquidity aspect. I fear that the rate cut comes at a time where, something goes wrong. I think we have to observe economic data pretty closely. I don't know, Kelvin, if you agree with the same way, but I won't be there to eat a 40% drawdown on Bitcoin. if macro actually does not correspond. We slowed down private investments meaningfully. I think our focus right now is only on things with real business model, real users, and some type of real adoption, because San Trust exchanges are just not listing things that are pure infra or things that are just scientific projects. I think getting onto Binance and OKX has been challenging this year. And I think, if you look at the altcoin market cap, it kind of stayed at $200 billion, but now it's probably down year to date. And if you account for the number of tokens that came to market, an average altcoin, barring meme coins, is probably down 15 to 50%. So we're not really a buyer of those coins unless we feel like KPI are inflecting or if there's no unlocks. I think we're focusing on majors. I think majors have a longer term, pretty bullish trend if you just kind of account for liquidity. So I don't know, I'm bullish for the next 3 months. And then after that, we have to wait and see. That's my view.
Sounds good. Thanks a lot for sharing all those insights. And then right now, my next question would be about the high FDV and low circulation VC coins per se. And I believe that right now, the communities doesn't really buy this trick anymore. And for VCs like ourselves, what do you think are the potential ways for VCs to get an successful exit? Maybe you can start with Calvin this time again.
Yeah. So I think there's been a lot of angst around these high FDV coins. Part of the problem, obviously, is that the way that these tokens vest these days is that the early investors are locked up for at least a year, right? And so you don't get a lot of float in the initial days. And so artificially, there's not a lot of supply, and that keeps the FDV very high. And the second problem is that there has been, over the last few years, a lot more money flowing into venture funds than liquid funds, right? And so there's a lot of capital that keeps investing in multiple stages, that keeps driving the valuation higher. I don't think there is an easy problem. And clearly, retail investors have no interest in buying these overinflated coins. So I think these coins are just going to be relatively unloved until the valuation comes down to a level that is more interesting, right? And during the recent sell-off, we did see some of them getting to levels that start to look attractive, and we started to put some capital into some of them. So I think there has to be a correction, either via the market or via more supply coming on, which ultimately then causes these valuations to adjust. So for us, it's kind of interesting because we run 2 venture funds and we also run a liquid fund, right? So on the venture side, obviously we want these high FDV coins to do well because we want to get the exit. But on the liquid side, we find them less interesting because there are other things that are more attractively valued. And that's just the way it is, right? We can't sell from a venture fund into a liquid fund because there'll be a conflict of interest. So, for us, it's really case by case, right? And on the venture side, our focus is on working with the founders to help them get more adoption to justify the value of their coins. And on the liquid side, it's really just to find the best investments, whether they're VC investments or they're, investments that have been around for a long time. And that's our focus, right? On the venture side, I would say, in order to counter this issue, obviously we have to focus on very early stage projects because the later stage you are, I think the harder it is to make money, just given how the public market is responding to these coins.
Yeah. Recently, I like to say most community, they know about Layer 0, Brass, and ZK. It seems they are not good represent the high FDV and low circulation. Yeah, so that will be definitely the issue, from the investor perspective. Yeah, so like you say, in the past 2 cycles, the exchange like Binance and some crypto community, investor, and the founder, I think they are the 4 parties. 4 parties they have never easy opportunity to make money at the last 2 cycles. Yeah, but as more talents enter in the industry and better projects emerge, the issues from the ICO era are now coming to real issues. data industry must address and cannot avoid because price discovery process should be handed over to the market earlier. Yet founders need to rethink their TMF, token market free, token model framework. And exchange need to reassess their listing principles. An investor must evolve and become stronger. So for some huge projects, leading paradigm shift taken may require some time for market corrections. Like Solana, dropped 50% from its listing price and didn't recover for several months. The community is profit-driven. I believe as BTC ETH reach new highs, the community will continue to support blue chips or coins with competitive values. So token unlock don't necessarily lead to dumping. Right now most of the VC, they invest in one deal and they ask the lockup term around 4 years. Do you know what that means? 4 years lockup terms. They means like similar IPO investment. Most of the security firm, they invest in the pre-IPO. They only need to wait 2 years. But for most of the crypto VCs, they need to wait for 4 years, 5 years. So they are pretty hurry about what time I can sell. So like to say, the first day, the day one listing, and most of the VC dump a lot, and because the low FDV and most of the airdrops miners, they also dump a lot. So I like to say right now, the market situation is not hedged. So they need more and more the players. They need to change. They need to improve. Like some of the exchange, they need to change the listing principle, not only for users, because most of the VCs, they invest in not the right user base. We know most of the users, they rely on farming and airdrop. And the founder and the teams, they need to know what's the PMF, what's the TMF. If they don't know, they'll be very difficult to go to the next cycle. So that means like the Web3 side, in the long term, I like to say, more and more the good founders will be coming there, and the community will be happy, because we will get some good founders, good projects in the future, in the no long future.
I'm with Calvin on this one. I think if the centralized exchanges don't list them, like, they're not gonna get the high FDV. That's one. The market's gonna find its price. So if nobody buy that shit, like, it's gonna reset at a lower price. We're already seeing that. I think if the projects aren't just complete scams, like, and if the only product market fit is to try to get themselves onto a centralized exchange listing with absolutely no product. And the only thing they optimize for is this massive FDV with an ecosystem portion to be dumped in day one. We probably will stop seeing them. So that's with the market doing its own thing. But I also think that if the power shifts towards decentralized exchange, right? If there are ways to list your token with actually ample liquidity, and you don't have to rely on, let's say, Binance, OKX, and the tier 1 exchanges, I think the structure at which these tokens are designed will change meaningfully. It doesn't necessarily have to be a 4-year investing schedule with maybe 20% team, 20% investors, and blah, blah, blah. It could very well be 100% day one fully unlocked investor portion, similar to a traditional equities market. But teams are not choosing to do that because doing so prevents them from centralized listings, therefore not getting them the best valuation. If the industry evolves over time to allow for more venues, I think this kind of fair structure allows for the high FDV, low float structure to be kind of a thing of the past. And then the last thing I would say is that I think you have to really watch the election for this cycle. Because if Trump gets elected and we get an SEC chair that's quite friendly to crypto, by June of next year, we might get a sandbox policy that allows for a certain type of value capture without triggering security designation. And if that is the case, I think we can actually have cash flow flowing to tokens and for teams not be fearing for their life in capturing any value. And if that's the case, maybe we can have actual fundamental analysis on tokens. And when that happens, well, maybe even if it's massive FDV, people can still buy those things because there's valuation support. I guess that summarizes it.
Also, to echo on Calvin and Josie's part, I believe that most of the time when we ask a common question to builders is that what's your advantage? 1 year ago, they'd say technology advantage. But right now, more and more focus has been on the token side, on the community side, which is good. We see the evolvement of the mindset kind of been changing these days. But I think it's time for us to think one step forward. Instead of just building the community, we are looking for the real product. But token is not the product. Foresight is actually dedicating to find the real product, the real company that has innovative product and has the ability to make use of community, make use of tokens, and kind of incentivize people to participate in the value creation process of their product offering. So I believe that's what crypto right now is in urgent need of. And we're always searching for the most innovative product offering right now that can actually generate real business value. So because we are running out of time a little bit, so I'll just jump through some questions and let's talk about mass adoption. Apparently, in order to hit the price point for BTC to go to 100K or 200K, we need more users into our crypto world. So what do you think are the potential business models, potential product that can lead crypto to the next phase, to like 1 billion or even 10 billion users?
Yeah, let me go very quickly. I think first of all, I think you made a good point about sort of user adoption, right? Because I think exchanges have to move away from the mindset of let's list the biggest market cap infra projects that can pay us a lot of fees to listing projects that actually have users, right? Because that will then change the whole issue that we have with high FDV coins at the moment. I think from a user perspective, I'm optimistic because I see a couple of things happening, right? So one, we talked about the TAN ecosystem earlier, and the TAN ecosystem has brought in at least 20 to 30 million users, right, this year, incremental, right? And then I also see this in this cycle, a lot of the traditional fintech applications, right? The likes of Revolut, the likes of Robinhood, sort of embracing crypto, allowing people to use their apps to trade crypto. And no doubt they're not actually users of crypto products at the moment, but that's the first step, right? You start trading crypto, and then once you kind of get a sense of what crypto is about, then you start to check out the products, right? So those apps obviously have a lot of users, and I think they will come.
Yeah, I can talk a little bit about the sustainable business model for most of the startups. Yeah, I like to say the trends in the revenue generation. Yeah, many Web3 projects, they're struggling to get some revenue. Yeah, the good sustainable revenue generation in the short term. Yeah, in the B2C models, the limited user base in the crypto space mainly consists of the financial traders rather than the consumers, making it difficult for projects to generate significant revenue outside of financial transaction. Yeah, so in B2B models, most of crypto startups lack product market fit and revenue, with only a few business scenarios, such as data processing or security. Yeah, showing the real demand for paid service. This meant the path of sustainable income trends in most of the Web3 projects. Yeah, and for the token utility and sustainability, token often less sufficient use case, and the natural demands for TMF also not enough. Yeah, for token economy to survive, yeah, it must be closely tied to user activity and scenarios. If a protocol has a naturally active user base with sustainable interactions or economy activities, it is more likely to integrate token consumption effective. Yeah. So in summary, while token can be a powerful tool for certain projects, they are not always necessary for sufficient for success. A strong business model, particularly one they can generate sustainable revenue, is often more critical for the long-term viability of a project. Yeah, and I'd like to answer the mass adoption questions. Yeah, so I'd like to say more and more the Web2 platform will come into Web3 space. Yeah, since the approval of BTC and ETFs in the US has been approved, yeah, the country has been aggressively advancing crypto financial policies. We can foresee that the US will likely use a combination of finance and technology to control to control the industry, the Web3 industry. That means like Tong, like Telegram has right now he has contributed around around 30 million users for Web3. Yeah, so some similar Web2 platforms they can bring a significant influx of users of Web3. It is conceivable that in the future Web2 users will seamlessly enter the Web3 world without even relying. Yeah, so without needing to worry about the underlying infrastructure, platforms like Meta and Twitter are also expected to enter Web3 at the near term, I like to say. Yeah, and we also pretty bullish about consumer. Yeah, I like to say recently I used the Web3 consumer product called Zora. I'm not sure you guys know it. Yeah, but it's the new Web3 experience for social. Yeah, so we try to explore some good opportunities, like open consumers, consumer infra, and AI consumer, So I'd like to say the generative AI has already found PMF in the consumer Web tool. Yeah, so the token incentive and coordination mechanism are exceptional. Yeah, so the content space will likely be where Web3 consumer and Web2 AI intercepts. Yeah, so more and more the Web2 developers and Web2 platforms, they will involve in the Web3, and they will involve more Web3 users, and Web2 users can switch to Web3. Yeah.
Awesome.
I'll keep it very fast. I think you need three things. Decent production value with the product, can't be crap. Actually, pretty addicting and fun money games, has to be about money. And then number three is as little friction as possible when it comes to US dollar flow. When you have those three things, you get users very quickly.
Awesome. Thanks a lot for sharing all those insights. And that basically concludes our panel today. And everyone, please give another round of applause to all of our honorable panelists.
Thanks, Alice, and all our guests for the wonderful discussion and for sharing your insights. Yeah. And I think this panel helped us a lot to understand the investment trends in the crypto space now. 感谢我们各位嘉宾的精彩分享，让我们更好的了解近期呢在 crypto 投资领域的最新的趋势。